in this video, we're talking about TRIAS, also discussing how I enter the market, what levels I look for, and what is my strategy when it comes to deciding on exit and entry points. There were questions asked during the stream about different target points and where to find them, and I explain it based on the trader's reality indicator. And I also mentioned in the other two, one of the other two indicators that I also use, which is Comet and Asteroid Belt by Spaceman, and another one of my favorites is Trading Alpha. Absolutely love them. So I hope the insight on how I identify the zones and the level points will be helpful, and you will learn a little bit from it. I hope you enjoyed this. I think the last time when I was telling you guys, it was in around the $3 mark, and I said easy 10x if you have patience for it. TRIAS will 100% come back up to that. I'm nearly 100% convinced this is going to do much better than 30.
Do you think when you're looking at TRIAS, do you look at it on log scale, or do you take log scale off for it?
No, I only just look at the chart, and that's enough.
I mean, do you know, like, so at the minute, you don't have log scale on. Do you know on the chart?
Yeah.
Do you know when you turn it on log scale?
And what's log?
It shows like a see at the bottom right where it says auto, right, and then log.
Yeah.
And then if you double click like the price column on the right.
Right.
Yeah. So I was never sure because I've been using fibs to try and figure out my take profit targets and stuff like that.
Mm-hmm.
But the fib targets like differ when you're using log scale or without it. So I was just wondering what your preference is.
What I never use this. I always look at simple support and resistance, and I would look at my targets there as well. I have guys, I don't know how many, if you've seen my previous streams, if you've followed me at all before, I use this indicator, and it is honestly, it's trader's reality. It's free on TradingView, and this indicator shows you liquidity pools and zones of interest. Now this is a daily chart, so it's going to be a little bit different. I use it more on smaller time frame, but for a long term, like, you know, for the future, if the price is moving, if there's a shift, I can see now, for instance, right here, this is the next zone. This is a big zone where there's a lot of money. A lot, because obviously when we were dropping, we came back up and we were retesting. Everybody thought it was a retest and a bullish one. We were meant to go up. There's a lot of money here, and that is going to be eventually taken. That's going to be eventually taken, that zone as well. So for daily outlooks, this is also good, and I usually just look at simple resistance and support, and they work for me the best. I've learned to just trade mainly based on them and price action, but sometimes when I have those liquidity pools marked, it helps a lot, because the support and resistances, they don't always hit to a T, because there are a lot of, you know, obviously majority of traders use support and resistance, and eventually they'll obviously get either broken or retested or whatever. But when you're trading and you're scalping, I think it was PYR chart, and it was absolutely spot on. But if you go to the smaller time frame, it is actually amazing to see. Sometimes when you've entered the trade and you're looking for your target, I sometimes just base my targets only on those liquidity pools. So like that red candle would have been something in like the shift. If there was a shift for me to look for long, say 479. All right, so let's remember that price. 479. 479. And look at that. 479. It doesn't matter that it went up higher, right? There was a shift. I could have longed, I don't know, I could have got into my long here or bought a bag of TRIAS here. Could have bought a bag of TRIAS here because it was retested 3 times. And going by that candle there that was marked, I would have marked that box around this area, had my target at 479, and my profit 479. Look at that. That's 40%. If I was to enter a trade there, even on that support, or just below, like if you wanted to get in, because I could use the red candlesticks to get in to find my entries as well, more or less, because eventually they do get taken. So I go back and like that. Look at the price point here, 320, and that was came down to that point so many times. I could have literally just had my buy order at that point, wait for it to hit, and then sell order at that next interest point. That's the safest. That's usually the safest, like 50% move from that liquidity to another liquidity. That indicator works so well on nearly every time frame. You can go to like a 15-minute as well and like scalp on this and wait basically for your price action. So yeah, like those MPV points, that's how I do it. I don't use those logs, and I don't do my targets. Very seldom I use fibs. Fibs, I use them mainly for after all-time high, when I'm having, okay, what could be possible next target. I just never learned like to the point where I enjoy using fibs. I always said it to one of my friends. I was like, oh my God, I actually hate them. Not to say that they're good, but they're brilliant. But like, let's say right now, okay, on the 15-minute, like we had 1, 2, 3 hits to the high. There is a possibility we're going to come down here. We're going to come down to $4. If it doesn't bounce off this, but that's a 15-minute, I would nearly say this could be our quick scalp if I was scalping. But I'm just showing you the indicator more really, and how I look at my targets. So support and resistance, super important. The only thing most amazing traders do use is support and resistance. They don't even look at volume. They don't even look like at, I don't know, any other fancy indicators. And then I suppose the next thing is, what type of a trader are you? Are you scalping? Are you in it for like a swing trade, or are you investing until you see your investment return? Because then obviously looking at a higher time frame will pay off better than worrying about what is the coin doing here on a 15-minute chart. Is it going to come down to the $4, or is it going to go up to the higher price point? No, you just look at like a bigger outlook. So that then obviously take that into consideration and find the best way. Fibs, if you like using them, I'm probably the wrong person to ask about them, how to trade off fibs.
No worries, that was good. Do you say it's Trader's Reality that?
Yeah, Trader's Reality, and it's free.
Nice
Uh,
one. I'll look at that.
there it is, Internix fella, that's him. And he also has like that psychological levels, the opens and stuff, and reality SMAs. I think I have them added, but I haven't used them yet. I follow him. I used to follow him a lot more and more before anyway, on YouTube, but he does daily updates, sometimes twice daily, because he does London Open, and he does New York Open. He was actually doing London Open as well recently, but that guy is literally living and breathing markets. You can join his Patreon as well, you can join his but I learned all of this without paying for anything, guys. There was no need. I love this indicator. I use other indicators. I have that is another favorite one, but for targets, for entry points and for exit points, I think Traders Reality is the second best after support and resistance. The belts are great to kind of for scalps, all right, and kind of like get in on a move here and there, like, you know, right now we're trending below. That's a 15-minute. We're trending below. I prefer this maybe at least 1 hour. So these kind of serve a little different purpose now. You know, you see the comet is actually turning here. So if we, like I was saying, if we don't bounce here, I'd expect the 4, and that would be just the middle of the belt. So there are things you didn't look at, all your other indicators, and the confluences comes into play. And this is the best you can do then when it comes to trading. You have all the information, you have your confluences, and you're entering the trade based on that. If it goes the other way, you weren't wrong. The market was wrong. I'm only messing. The market obviously turned, and there isn't right or wrong when it comes to trading. There's only your conviction. Somebody else can see, look at the chart and see other things and be like, but I think this is what's going to happen. But it doesn't mean that you're wrong. It just means that it's hard to predict so much. I mean, looking at right now, it's like 1, 2, 3 hits to the high. Yeah, possibly the $4 will be retested. It would be like just around this breakout point, this support here, resistance. That was, yeah, $4 for $4. I wouldn't be surprised to see it next. And the third one I always mention to you as well is the VIP trend, because it does point you. These are paid indicators, I may add, but they have like your tops and reversal points marked, and confluences come with it. So that just kind of is like an extra tool. Like, I wouldn't know at all where to go and look next if I didn't have the support resistance, you know. So I think there's different ways of trading, and find the one that suits you, find the one that you enjoy the most, that gives you the most confidence and confluence for yourself, and you feel like, right, this is working for me, I can read it, I understand why it's happening, what's happening, I'm going to enter this trade based on what I'm seeing and what I'm reading. If it goes your way and you had that conviction, you know, happy days. If it works for you, stick with it. I hope that helped.
No, that's really useful. Thanks for that. I'll definitely have a look into those indicators.
Awesome.